Hello everyone, welcome back to my channel. So this video comes in the context of the apparent claim that the US administration, in particular US President Donald Trump, the announcement that he made on his social media, Truth Social, he made a post slightly before markets opened yesterday on Monday, stating that the US and Iran held very productive talks about the current situation in the Middle East. And apparently, and I mentioned this in the previous video, which was the start of week number 87 in the 100K challenge. I mentioned that even though markets started pretty much in the red, their pre-trading window, they basically U-turned and shot up even before markets opened because of this specific announcement. And even though they subsided a little bit later towards the end of the day, because Iran also publicly announced that no such talks took place, so they completely denied the claim that US President Trump made on his social media post. But what concerns me here is what actually transpired today, Tuesday, about the suspicions that again there was some unusual activity in the market, specifically in the equity market and the oil markets, concerning trades that were made with a strong suspicion that these trades were made with advanced knowledge of this announcement. And so the traders in question traded in a very particular way that in which they profit immensely from this announcement. And I came across this news piece over here, and even though, of course, as always, the White House denied any misuse of information, and what actually happened. So about 15 minutes before, Trump posted productive talks with Iran on social media. Traders made large bets in crude oil futures. Soon after the post, oil prices fell sharply, making those positions profitable. There's a timeline here about what happened. So there was some very strong trading activity about 15 minutes before the post. Trading intensity jumps further, still about 15 minutes left for the announcement, and then the announcement comes into public, and around 6,200 contracts of Brent and WTI were traded, total value roughly 580 million, and this was just not oil. Futures on the S&P 500 also saw a jump, and even gas markets showed unusual activity. This article by the Financial Times, in which the Financial Times interviewed some market participants, they cannot claim wrongdoing outright, but the pattern feels off. And factors that make the trade stand out: no major data scheduled, so there was no obvious trigger for large trades, no central bank speakers, and early morning timing. Of course, because during pre-market trading, activity and by extension liquidity is low. Could it be just a coincidence? Of course, there's still a possibility, but given what the information that is in this article and in other several articles and other even videos posted on YouTube about news media channels such as Sky News, BBC, and I'm being careful in saying that, not mentioning either Fox News or CNN. I'm talking about, in this case, British media channels. So I'm not trying to convey any sort of political bias here, but I wanted to know more about what actually transpired, and so I took this opportunity and opened an account on the new hot property in the AI landscape, which is Claude, the AI chatbot from Anthropic, which is widely perceived as being the best in class today. And so I opened the account and I tried to I made a few prompts that I'm going to share with you, and you will be able to see that I made these prompts uh, very clearly, but at the same time with the perspective that I'm trying to be as unbiased as possible. I have my opinion, my personal opinion about the U.S. president and this U.S. administration, but even so, I try to make the, the prompts as neutral as possible, because for me, I don't care who is in the White House or who is the president, whether he's Republican, whether he's Democrat, as long as the person does a good job, that is what is the most important. And I'm not even American. I'm not as invested, or I don't have as a strong an interest such as strong as the American population. But I think being in the hot seat for the most powerful role in the world, which is the U.S. presidency, I think the person must be vested with very strong morals and a very, very strong sense of what he's doing and what impacts his role and his decisions have worldwide. And so that's why I decided to kick things off with this prompt. So, in the context of the US President Donald Trump's announcement that the US and Iran had productive talks in the last few days, there were rumors that there were some uh, trades in the markets consistent with insider trading, and I asked them, describe the facts of what actually happened and why those trades are consistent with insider trading. So I want to know the truth, and I'm going to pretend I'm completely a layperson. I don't know anything about trading. I don't know anything about markets. I just want to know why those trades are consistent with insider trading. And also, I want, and I think this is an important point to make again, also evaluate the possibility that those trades could have been made without the access or knowledge of any kind of material non-public information. So basically, I want to know if it's possible that, yeah, these trades could have been done by a person who is an expert in the market, does not know anything that the average public does not know. So yeah, just like you and I, basically, if you and I could possibly make those trades with those patterns without any kind of material non-public information, or should I say insider information. And so this is what Claude returned. So it says that approximately at 7:05 a.m. So this was about 25 minutes before the markets open. So there was the post saying very good productive conversations toward the complete and total resolution of hostilities in the Middle East. And so the market reacted this way. Added 1.7 trillion to stocks, pushed the price down by $17, which is about 15%. And yeah, basically the markets reversed completely the trend that preceded this announcement. Now, onto the trades. The suspicious trades. Contracts corresponding to at least 6 million barrels of Brent and WTI crude were sold in 2 minutes from 6:49, and apparently, so this is about a quarter of an hour, so about 15 minutes before the announcement. The average volume for the same time period over the previous 5 trading days is about 700 lots, or 700,000 barrels. Now, keep in mind here, if we look back here, this says that there were 6,200 contracts. So if each contract has 1,000 barrels, This is consistent with the 6 million, more or less 6 million barrels that is in here. That's why the 700 lots is about 700,000 barrels, so it makes sense. In other words, volume was roughly 9 times the recent norm in that specific window. And keep in mind, the previous days were already abnormal days because of everything has been going on. Trading activity has increased, so this is already above what is usually the volume under normal conditions. So this is 9 times above this already increased activity. This is a lot of trading. And it says here again about 6,200 Brent and WTI future contracts change hands between in those 2 minutes. Yes, this is a lot of volume. A 1 minute flurry worth 580 million based on Financial Times calculations using Bloomberg data. Volume spiked simultaneously about 27 seconds before 6:50 a.m. Now, in the futures market for the equities, a sudden flurry of trades in the S&P futures worth 1.5 billion were placed exactly in the same time window, right before Trump's social media post. These were long positions. So, yeah, basically they bought the contracts. And this is clearly a bet that you are clearly a bet that the equities will rise in the same way in here. If you sell the futures, you are clearly expecting that the price will drop. By some estimates, the oil position alone could have generated more than 100 million within 20 minutes, with equity gain pushing the total significantly higher. So then Iran denied the claims of the U.S. president in an attempt to manipulate the financial and oil markets. Well, there might be some truth here, that's for sure. And that is why later in the day, as I mentioned, some of those gains were reversed. The White House pushed back, denying any administration official illegally profited from insider knowledge. Of course, you have to deny. And some more propagandistic, statements saying that he's doing what is best for the American people. Yeah, I'll bet. Basil says irresponsible. All right. Why these trades are consistent with insider trading? Now, this is pretty damning to me. One U.S. broker, market strategist, said, while it's not easy to prove causation, questions will be raised who had the incentive to aggressively sell futures 15 minutes before Trump post went up. And again, this is completely against the trend that was going on at the time. In 25, a hedge fund manager added, in 25 years of watching markets, this is a highly unusual pattern. It's hard to explain a trade of this scale, so it's because it's very large, on a Monday morning when there is no event policy announcement. It was a completely, as I mentioned before, it was a completely innocuous day. There is some Fed speak, but yeah, especially after a Fed meeting last week, yeah, this kind of Fed speak are particularly irrelevant. Most of the takeaways from the Fed were already taken in the press conference last week, so yeah, these are pretty much immaterial. No public catalyst, no schedule announcement, no newswire report, no rumor circulated in public channels. So the information that Iran talks that occurred was by definition only those who have been party to those conversations or to Trump itself before he posted. The trades were not ambiguous. Oil was sold short, and S&P 500 futures were bought long. Yeah, these were clearly directional trades, and so whoever did this had no doubts that this was going to happen. And for me, and in my before I started to record this video, I wanted to show just this prompt, But then I felt the need to go further, to dig deeper, because of particularly this point. A pattern of unusual trading activity has repeatedly been detected ahead of major US government policy announcements, fueling broader insider trading concerns. Earlier, a user on the prediction market Polymarket drew attention for placing roughly a 34,000 bet $1,000 bet that the US would invade Venezuela by January, placed just before the arrest of Venezuelan President Nicolas Maduro. Um, yeah, no words. Scale relative to normal activity. The oil's future volume was approximately 9 times the 5-day average, as we already mentioned. All right, good. Now, here comes the other side, the counterpoint. Could these trades have been made without access to material non-public information? There are several legitimate alternative explanations. Let's see if they hold up. Tim Sharrow, head of derivatives, said the trade size was larger than usual at the time of the day, but it's difficult to call it excessive. All right. This is semantics, whether it's excessive. 9 times the trading volume of already a very active market. Yeah. All right, I'll give him that. Over the past few weeks, capital inflows in the Brent futures options have increased significantly. True. And most investors were holding long positions. True as well. And when positions are skewed this heavily in one direction, even a small trigger can cause prices to move sharply. Absolutely true. Totally agree. In other words, a crowded long position in oil could make the market particularly sensitivity to even routine selling. This is absolutely accurate, completely true. Yeah, all it takes is a small spark or a small trigger to bring the market completely to the from one side to the other. I totally agree with this statement. Algorithmic trading systems could have plausibly have detected unusual signals, diplomatic language, satellite imagery, reduced Iranian military activity, even wire service chatter that triggered large automated positions with new human insider involved. Again, I'm not an an expert in algorithmic trading systems, so I can't say too much about this one. The conflict has been ongoing for weeks, and markets were very volatile. Sophisticated market traders actively actively positioning around geopolitical de-escalation scenarios might reasonably hold standing orders to execute at preset conditions. All right, this is a bit irrelevant. This point. Um, Correlation is not causation. With billions of dollars trading every day in these markets, some trades will inevitably appear in retrospect to have been well timed in advance. Yes, this is completely coherent and true. Totally agree. The case that innocent explanations are insufficient. Now, the simultaneity of the oil short and equity along the same 60-second window is very hard to attribute to coincidence or independent algorithmic signals. This is because basically whoever did this tried to profit and did profit from both directions. Yes, of course. So you had really to know what is going to happen in the next couple of minutes to do this. So yeah, it makes sense. Each trade alone might be explainable, both together in the same minute in exactly correct direction without any public trigger strains credibility significantly. Yes, I totally agree. Furthermore, it has not been established whether this was the action of a single entity or multiple market participants moving simultaneously. Of course, if it's only one, or perhaps two or three, yeah, insider trading becomes much more likely. The broader context matters to the Trump administration as a documented pattern of market-sensitive announcements via Truth Social with no advance press briefing. Oh yeah, 1000% I agree with you. Creating a structural information asymmetry in which only a very small number of people, those physically or communicatively proximate to the president, could have had advanced knowledge. This is a textbook NPI situation. Um, yeah, material, non-public information. There's no other way to do it. Yeah, to say it actually. Bottom line, the trades are not proof of insider trading. It, completely true, especially because if we have to be realistic. You can never, or I can't think of a scenario in which you can prove with 100% certainty, all right, you committed insider trading. It's so difficult. It's so difficult to make a absolutely resolute case for that. But the the suspicious can most of the time make a case for this, and in this case, the suspicions are very, very strong. And regulators would need to identify the specific account, establish a connection with someone with advanced knowledge, and prove intent. And this is so difficult to prove. The SEC has not yet, the Security and Exchange Commission has not yet commented, but the statistical and circumstantial profile is severe enough that a plausible, innocent explanation would need to account for the simultaneously directionality, the extreme volume anomaly, the absence of any public catalyst, and the perfect market outcome. This is a very high bar for coincidence to clear. Yeah, absolutely. Absolutely. Now, but I wanted to dig deeper, and I wanted to see what other patterns or what other occasions took place that were similar to this one. And so I said, you mentioned there were other occasions in which unusual trading activity occurred ahead of major US policy announcements. Give me a list of all of those instances with the date and, if possible, the relationship of those traders with members of the US administration at the time. But consider only those in which there is a strong suspicion of insider trading. I don't want the noise. I really want to get to the concrete and actual cases, very strong cases that this was happening. And to my surprise, as you will see, look at this. Suspicious threads linked to US government policy announcements. Israeli strikes on Iran, October 24, in the poly market, again, predictions market. A single trader was found to have placed bets with remarkably accuracy hours before Israeli strikes during the tit-for-tat conflict with Iran in October 2024. This trader won a staggering 93% of his five-figure wagers about Iran, even though the events they predicted were unannounced military operations. Unannounced. And you make several bets, you get 93% of them right, even though you were not supposed to have any knowledge, any advanced knowledge of the military operations that were about to take place. Wow. Yeah. You sorry. You either have to have a crystal ball or there's no way you can do this. Legally, of course. The trader overall win rate of 93% across dozens of geopolitical bets. So you may talk about 12, 20, 30. Yeah, is statistically incompatible with chess. Wow. Bubble Map CEO Nick Wyman told CNN, all of this is strong signaling of insider activity based on the amount they made, the markets they bet on, the timing of their trades, the success rates of these trades, and the fact that they were connected on chain. Yeah, this is too good to be true. Not yet traced to a named individual. The accounts are anonymous and operate on a poly markets offshore platform. I think we are. I may be wrong, but looking ahead in the coming months and years, we are going to see this kind of markets very much in a spotlight to increase that transparency to the public, because this is too bad. You anonymous accounts, you cannot have the you mean the law enforcement and government institutions cannot have access to the data related to these accounts. This is very, very, very risky. Or this is very bad, I think. Whatever. US airstrikes on Iranian nuclear facilities in June 2025. Again, Polymarket. Uh, Security agency investigated suspicions that individuals within the Israeli defense establishment had used classified information to place bets on Polymarket. Alright, but this is with Israel. User Rico Suave 666 placed several bets with suspicious accuracy regarding Israeli military operations in Iran. Alright. Wagering tens of thousands of dollars and making a profit of around 150,000. The places were bet hours before unannounced military operations at odds that reflected no market awareness of imminent strike. That means that the probabilities were very low regarding these particular bets having success. So yeah, you can only do this if you have some sort of advanced knowledge, or you are basically trying to play to moonshot, basically, to hit the moon or be struck by lightning, basically. This is the only instance in this entire list in which there have been actual criminal charges. Israeli activities arrested several people and charged two, a military reservist and a civilian, on suspicion of using classified information to place bets about military operations on Polymarket. Yeah, the Israeli authorities do not mess around, do they? They were indicted for bribery and obstruction of justice. This is a clear proof of concept that insider trading suspicions in this wider pattern are not merely theoretical. Oh boy, this one is very dear to us. The Liberation Day. Actually, this is not okay. I was thinking about the April 9th, not the April the 2nd, but all right. And now sweeping new tariffs. So in response, the S&P lost about 5 trillion in market value within 4 days, the largest drop ever recorded. More than a dozen US officials and congressional aides made well-timed stock sales in the days and weeks before the announcement. Bondi sold between 1 million and 5 million in Trump media stocks. April to itself, the exact day veiled the tariffs after market hours, as well as between 250,000 and 500,000 of Trump media warrants. Sold shares, almost 3 dozen, 2 days before. Now, let's keep something in mind. We have to be fair here. I don't think this one is particularly serious, unless there is some sort of restriction on this person to sell the shares. And I tell you why. We all knew the tariffs were coming. The US president said it many times during the presidential campaign. We are going to implement tariffs. So everyone knew this was coming. And anyone who knows economics one-on-one knows that tariffs are bad for the economy. And because you are trying to first of all, the population will be taxed further, because tariffs are a tax on your population, and then you are always at the whim of retaliation by your trading partners. So this is a lose-lose situation for everyone. The only entity that wins with tariffs is the government, because it will get more revenue, which is the tariffs. So I don't see. I I I have to be fair here. I don't see this much. With I don't make a strong case here for insider trading, because everyone knew this was going to happen. How bad it was, yeah, the magnitude is open for discussion, but everyone knew that this was coming. Duffy, Transportation Secretary Sean Duffy, sold shares in almost 3 dozen companies 2 days before. All right, so again, this is the same thing. I don't see why this, yeah, unless again there is a restriction, but on because there are some rules in the government in which you cannot sell shares at particular times. So I can in here I have to give him the benefit of the doubt. I don't think this is as important. The week before Liberation Day, key official in the agency sold up to 30,000 shares of stock. Sold up 50,000 in stock, and then bought a similar investment as prices fell just before. Made a significant. All right. Okay, it's a case of insider trading, but even if it is, I don't see this one as being serious. More than a dozen high ranking executive branch officials and congressional aides made well timed trades before Trump took office in January, most of them selling stock before the market plunged amid fears that Trump tariffs would set off a global trade war. Again, I don't think that this is as serious as the other ones, and I I'm not suspicious to be saying this. I don't like the president, so but this one I think I have to make him give him some benefit of the doubt and make him justice, because yeah, I don't think this is as bad. Now this one is the one that holds very dearly to us. I will never forget this day. Before pausing the tariffs that had thrown markets into disarray, Trump posted on Truth Social 9:37 a.m. So this is just after markets opened. This is a great time to buy. This is oh my god. This this is for me is so hard to read. Like you cannot even imagine. His official announcement on the trading pause came roughly 4 hours later and 1:18 p.m. The stock market saw one of its best days in history, with S&P surging 9.5%, one of the strongest performance in over 80 years. The post functioned as a public signal to anyone watching Truth Social that a major policy reversal was imminent. Hours before the official announcement, anyone who bought immediately after 9:37 post and sold at close captured a near historic single day gain. I again, no case have been brought under the Stock Act, and some legal experts have doubted it would hold up to scrutiny from the courts. Again, this is a case that is very dear to me. Again, but I have to say, this is not a situation of insider trading, because there was no material non-public information to work with. This is a case of market manipulation. All right, the president, because he's a person who is in the, as again, in the most powerful seat that you can have in the world, and he knows how influential everything that he says can be to the markets, and it is influential. So if you say something like this to the market, of course, they know that he's giving a springboard that something is to come. And then when the announcement comes that the tariffs will be halted, um, again, people reacted, and people reacted once the announcement came. So people did not acted before this post or before the official announcement for the pause of the tariffs came into public. So this is not an instance of insider trading. This is an instance of market manipulation. It's bad. Is this is criminal because it's against the law, but it's not an issue, not an incident of insider trading. Uh, Again, this one. Oh, this is a good one. Um, yeah, this is also a good one. Again, Polymarket in the spotlight places a brand new Polymarket, a brand new. So this was open specifically for this. Placed a series of bets totaling over 35,000 that the U.S. would invade Venezuela and that Maduro would be removed by January 31st, when the market estimated the probability of intervention at only 6%. Yeah, this is very unlikely, of course. The account was created on December the 27th. Found that anonymous bettor doubled down on their wager just 5 hours before 150 US aircraft struck Caracas. The bettor placed their final bets between 8:38 and 9:58 p.m. on January the 2nd, and about an hour later, Trump issued orders authorizing the military strike. The bettor netted over 400,000. Yeah, again, this all the hallmarks of a trade based on inside information. This is CEO of Better Markets. Given intense secrecy around the raid, because of course this is highly secretive operations. The top members of Congress not even informed ahead of time. Any insider with advanced knowledge would presumably be someone at the highest levels of the government in a key operational role in the military. The trader was not been identified. However, Donald Trump Jr. is an advisor to both Polymarket and Kalshi. Oh my, this is such a conflict of interest. This is so bad. I did not know about this, but this is yeah. When politics and companies are heavily involved in this, I don't know what this Kalshi is. I did not research, but yeah, this is so bad. 1789 Capital has invested millions into Polymarket. The Trump administration also dropped 2 federal investigations into Polymarket that had been opened by Biden era officials. On what grounds, right? You wonder. Whatever. Alright, so on-chain analytics firm Bubble Maps. This is about the strike on Iran. The U.S.-Israeli joint strike on Iran on February the 28th. They flagged 6 Polymarket wallets that profited a combined 1 million by betting on a U.S. military strike against Iran, with most accounts created and funded within 24 hours of the attack. The wallets all purchased yes shares on the contract U.S. strikes Iran by February 28, 2026. hours before the US and Israel launched coordinated airstrikes. Additionally, the content trending under the username Maga Maiman. Maga. Oh man, they could not make it more obvious, right? Made more than 553,000 by placing bets on Polymarket about Iran and its supreme leader, Ayatollah Ali Khamenei, just before an Israeli strike killed him. This is oh shit! Wow. About the Maga Maiman account placed an 87 bet on US strikes, roughly 71 minutes before news of the attacks broke publicly, when the odds set at about 17%. The 6 wallets flagged by Bubble Maps were freshly created and funded within 24 hours of the strike. A pattern now well established across multiple events. Over 529 million were traded on Polymarket contracts tied to the timing of US strikes on Iran and the fate of Supreme Leader Ali Khamenei. No specific name insiders have been identified for this event, though the Maga My Man account name has attracted significant scrutiny given its overtly political branding. Of course, obviously. And I think this is the one that we just seen. Two new contracts created around March 21st, so this is Saturday. Bet almost 70,000 on there being a U.S.-Iran ceasefire before March 31st, standing to win nearly 820,000. This has the accounts have included the week posted on Truth Social that he was considering winding down strikes against Iran. Yeah, but if it pays out, would represent a return. All right, nothing happened yet, so we will have to wait and see. The systemic factors enable this pattern to persist. First, prediction markets are regulated by the CFTC, which one expert described having neither the money, the personnel, or expertise to police them effectively. And there's no interest to give them the money, the personnel, or the expertise to police them effectively. I think it should be said, making it a case of not of light touch regulation, but no touch regulation. Second, Polymarket operates primarily offshore, outside US jurisdiction, and uses anonymous crypto wallets, making identification of traders extremely difficult. Yeah, again, I think that something really needs to be done because, yeah, otherwise these kind of situations will continue to happen. Third, and most significantly, the Trump administration has actively cultivated the prediction market industry. All right. There is a case. There is a strong case to let this happen. It dropped the Biden-era investigations, approved Polymarket to operate in the U.S., and has family members serving as advisors and investors in the very platforms where the suspicious trades occur. Basically, they are all in family. It in the beacon in the country which is the beacon of the values of democracy. This is so bad. A structural conflict of interest that has drawn bipartisan criticism from lawmakers. Bipartisan. Even Republicans apparently are against this. And for good reason. But let's continue. I wanted to dig deeper and for each of those occasions include details of the trades that were made so I can better assess whether the level of confidence that each trader had in the outcome he was hoping for or was assured it would happen. I wanted to know more about the trades basically, but but this is basically the same response, but with more details about the trade. Some of them they don't have it, but I think this video is getting probably a bit too long. I'm just going to skip this. We all know already what is going on. I think you don't have to be yeah, a genius to understand what is going on here. The summary, yeah, the confidence gradient. I think this is a good one because this one is the most confident case of insider trading. Yeah, betting on the specific day of the weekend military strike is not a bet on any geopolitical analyst, however informed, could construct from open source information. The Maduro burdensome mix cascade of 4 complementary bets on the mechanism of the operation, not just the outcome. The mechanism shows knowledge of a specific plan rather than a general geopolitical direction. The MAGA my man on Khamenei ranks next because he had bet simultaneously on both the date of the strike and the specific killing of the supreme leader. Implies knowledge of the operational objectives, not just the timing. PEM bonding, yeah, I'm not gonna say too much about this. I have some doubts that this was actually a case in the same way as the others. Now, but as you can see here, and this is also an aspect that jumped into my attention. All of these situations came in the past few years. So I wanted to know, and that is why I asked the following. It seems that all these cases involve the current US administration. Are there any other similar cases with equally strong conviction? I just want the really, really blatant cases, but involving previous US administrations. And again, it came this one in which, yeah, apparently there was a meeting behind closed doors in the yeah in the wake of the great financial crisis. This person attended this meeting, and a day later he bought options to anticipate the market falling. So he bought some put options, which it says in here, and the trade, basically was betting that the market would simply collapse. And the next day, shorted the market on an ETF, doubling his money in 4 days, made more than 200 trades. All right. Again, because there was no way to indict him or to basically make him convict him, because convict this person, because there was not part of the law. The Stock Act came to close this loophole, but again, whether it's effective or not, we don't know. Senator Richard Burr, February 2020. So this is already Trump's administration. The first one was George Walker Bush in this second term. Again, apparently sold shares in the wake of the COVID-19 pandemic. Again, this one, I have to be fair, this concerns the first Trump administration, but we all know, or at the time in February, that things were getting worse and worse, and some kind of bad thing would happen. We don't know how bad, but as you know, anything bad that happens impacts the stock market very negatively. So the fact that you sell some shares, you could do that with only public information. So the fact that this person did this with material non-public information, all right, I can understand, but I think that a shrewd market participant could have done the same. Even though this person has a reputation as a poor stock picker for 8 years, again, I think the COVID came to be a significant enough event to so that people were aware that a big market downturn would happen. The senator in January, March 2020, again the same thing. I think in this case it was there's a bigger case, because the person and her husband sold some shares that they knew that they would of companies that would be severely handicapped by the pandemic, and bought shares of companies that they knew it would benefit from the pandemic. There's some case here to be had, and I accept that. But again, I don't see it in the same light as the other ones that we already explained. So because basically bought shares in teleworking software because people would start to work from home, sold shares of hotels, airlines, and all that. So, all right, it reorganized a portfolio that consistently expresses a single thesis: pandemic incoming, remote work and home confinement will surge, travel hospitality will collapse. Yeah, this one is because of the scale of the reorganization. I would say that there was a strong case for insider trading, but not in the same, for me at least, not in the same to the same extent as the other ones. The Justice Department ended its investigation in May 2020. The Senate Ethics Committee also cleared of wrongdoing. Again, it's a completely, yeah, green pass for everyone who does this. It's absolutely astounding to me. Yeah, signal set, whether the historic cases are comparable in convention signal setting to the current Trump era cases. The honest answer is broadly yes, but with important structural differences. Yeah, what the historic cases shares with the current ones. Again, insider trading. You are trading with uh, material non-public information which you should not have. But the current cases are more extreme. Of course, liquidity and the number of market participants has increased. It's much the scale of trades done now, given the size of the markets, are much higher, and you can trade large quantities of securities with much more ease than previous. So now unless you put the resources in the right institutions to pursue these cases, it's easier to engage in this kind of behavior. And yeah, this is pretty much it. Not one person, and again, I think this really, really stains any reputation that government institutions can have. What has been consistent across all administrations. No one person has ever been charged, let alone convicted. No member of Congress have ever been prosecuted for insider trading under the Stock Act. So the structural problem, public officials with access to market moving non-public information also being permitted to trade, has never been seriously addressed, regardless of which party holds power. Again, this simply is unacceptable. This cannot happen. But this is the world we live in, and this is what we have to contend with if we want to trade in the US stock market with these large swings every once in a while, fueled by market manipulation. But yeah, that's all that I have for today. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And yeah, I'll see you all in the next one.